ETF am I going to choose real estate? Because one is easier to start, one helps you to build cash flow faster, and of course, one help you to scale differently. So we're talking about ETF or real estate tonight, and we've been doing it for the past 3 days. Today we're going to be focusing on ETFs. We're also going to be focusing on um, focusing on the rule of 72. If you do not know what the rule of 72 is, you want to stick around. Rule of 72, ETFs. We're going to be talking about the account system that helps you build wealth. And of course, we'll tell you where does the wealthy put their money. So four things, those are the things we're going to be talking about today. And of course, if you are just meeting me, I'm Dr. Lina. Hey, Bisola, welcome. Thank you for tapping out the live. Welcome all the way from Canada. And we have both the TikTok and the YouTube community here tonight. Awesome. So good to have each and every one of us. It's absolutely amazing to have each and every one of us today in here. Welcome, 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 welcome. Awesome, awesome. Like I said, we have both the YouTube community and the TikTok community here tonight. And tonight, what are we going to be talking about? We are talking about ETF. We'll touch a little bit about real estate, right? It's a series at this point. So invite your friends, tap out the live, share out the live. We try to get to 10,000 taps within the first 10 minutes so that we can get on the FYP, right? That is the only language that the algorithm understands. Tap out the live, share out the live. Sharing the live, press my forehead on the screen, and your contact is going to show up, and then invite all of them over. Tonight we are talking about ETFs or real estate. They are both millionaires machine, and I will show it to you and prove it to you today. I will talk about the rule of 72. We will touch it. We will also touch the 4 account system. We would also touch where does the wealthy put their money, because why is that important? If you learn this, you would understand. It's just the spirit behind the rule. You would understand where the wealthy put their money so that you can replicate the same thing and start building wealth. As a matter of fact, this community is called the $1 Million League. So you see, NDL, it simply means $1 Million League. So it's a community of millionaires, people that want to build wealth in 10 years or less. So it simply means you want to get to the $1 million status within 10 years, right? People work for 45 years, from age 20 to 45, and they still do not get there. And that's what we are building here. But you have to be patient, you have to be coachable, you have to follow the steps and the principle that we talk about here. Click on the follow button so that you join the $1 Million League. Click on the subscribe button for my YouTube community. Tap out the live. Invite your friends over because class is about to be in session. And this is no play. We don't play here. We are, because I tell you, building wealth. Rose, thank you for subscribing. You know, the goal here is we are serious, right? Wealth building is very intentional. You cannot just say, you cannot leave it to the world and leave it to nature to say, oh, you know what? I'm going to build wealth. I'm going to build wealth somehow, some way. You have to work towards it. So if your goal is to build wealth, become a millionaire. 1 million. I did not say multi. 1 million, right? You need to follow this community, but you have to be coachable. You need to understand the principle. We don't chase hype here. This is about system and structure where we build generational wealth. Here is not a get rich quick scheme, right? This is about building wealth. And today we are talking about 4 topics we're talking about. We're talking about ETFs. Oh, welcome in. Let me know where you're connecting from. I am connecting from Texas in the United States. So let me know where you're connecting from, and click on the follow button if you have not done that. Welcome to the $1 million community. Hello Adele. Yeah, welcome in. Make sure you click on the subscribe button right there, and let's tap out the live, share out the live, invite our friends over, get your daily admin. Click on the daily admin right there. It costs you 1 cent. Those are for the TikTok community. All you have to do on the YouTube side is just click on the follow button. And by the way, if you haven't gotten, you are thinking of building wealth, the first thing you want to get is your Rich Dad Poor Dad. It's going to help you. Summer is around the corner. Take this book and read it and digest it, right? There's a reason why they say it is the #1 personal finance book of all time. #1 personal finance book of all time. So there is a reason why it is called that. So you want to read that. That has really helped me in my journey to building wealth. All right. So understanding that even with a vice president position, president's income and a professor teaching AI, cybersecurity, and deep learning, I still did not gain financial freedom. So it tells you something that your income does not build wealth. What build wealth is way more than that. Is way more than that, your income. And that's what we're going to talk about, some of it today. ETF or real estate. And the first thing I want us to do, and we're going to learn this together. One thing that you will learn about me is one thing that you learn about me, it's going to be trust but verify, because I need you'll be doing it alongside with me. One thing that we want to go check right now, where does the multi-millionaire, right? We said millionaire machine, right? ETFs or real estate. Where does the multi-millionaire, where do they put their money? And I want you to go on Google, use another gadget, right? I already know the answer. I'll pull it here, but I want you to also do it. Where does the multi-millionaires and the multi-millionaires, I did not say millionaires, multi, right? There's a reason why I say that. Where does the multi-millionaires, where do they put their money? And make sure you're clicking on the you're tapping out the live, you're getting your daily at me. If you have been seated for a little bit and you're finding it valuable, click on the follow button. Yeah, there is no reason why you're waiting. Join the millionaires community. So I would say, this is it. Where does the multi-millionaires, where do they put their money? That's the question, and you can check that by yourself. Where does the multi-millionaire, where do they put their money? So I would this is what it comes out with. And it says that multi-millionaires put their money, reading from here, multi-millionaires put their money primarily into equities, into real estate, private businesses, right? It tells you something. Where is the ETF or real estate coming from? Real estate. The multi-millionaire put their money in real estate. It did not say that it leaves their money in the account. So it tells you something. If you want to get to that $1 million status, remember, this community is $1 million league. Community of people building millions, getting to that millionaire status in 10 years or less. If that is your goal, you just follow the principle. Click on the follow button. Make sure you are consistent here. The principle and the steps here are, which is what I've used for myself to enhance wealth. That's the same thing I'm going to be teaching you. Make sure you click on the follow button right there. This is the $1 million community. So where does the wealthy, where do they put their money? Right here. That's what we have right here. It says that multimillionaires put their money primarily in equities. So ETF, you see, equities is the stock market. Whenever you hear equities, it means the stock market. And they primarily put it in equities and real estate. That's the second thing. We're talking about ETF or real estate. That's where it comes from. And then they prove it in private businesses. Then it goes further. Because having idle cash, right, loses value to inflation. So it tells you another thing, that the multimillionaires, it means that if you put your money in the bank account, right, it loses value to inflation. As of today, inflation in the United States is 3.8%. As of 3 weeks ago, it was 3.3%. So it means that, what does this mean? Dr. Lina, what does this mean by inflation? It simply means the rate at which your money is losing value. So in some other country, it's even double digit, 10%, 15%. That's how crazy it is. It means that for every $100 that you have, you are losing $3.08 every single year. So it means that, and you're like, okay, Dr. Leah, bring it home, bring it home. It simply means that if you take your $100 to the store yesterday, last year, whatever you were able to get with that $100, you cannot get the same thing. You will get lesser this year. That's what it means, right? So it means that, yes, you are looking at that, your money in Bank of America, Chase, or Wells Fargo. Trick, welcome in and congratulations joining the $1 million league. Congratulations to you right there. You have just taken a chance to your finances and to gaining financial freedom in 10 years or less. So it means that your your money that is in the bank, right, is losing its value at 3.8%. That's inflation. Now you can go on Google, it's everywhere. It's not me saying it. I always say trust but verify. Whatever thing I say, always back check, because there's so many BS on the social media. You want to make sure that, everybody, welcome in. You want to make sure that you know who you are listening to. Make sure that you also go and verify. I do that as well. Don't just listen to people. Make Google your friend. That's why we have it here. right? 3.8% is inflation as of today. Alfred, thank you so much for the roses. Thank you for the gifting. Make sure you get your daily admin. If you find this valuable, click the follow button, click the subscribe button for my YouTube community. Thank you for hanging in there. And we're talking about ETF or real estate. We're going to be talking fully on ETF today. We will also talk about the 4-account system that you need to have. So you want to stick around. We're talking about where the wealthy put their money, right? That's what we are starting with. That is a mindset shift. We're talking about that. And at the same time, we would also talk about, there was one other topic. There was one understanding rule of 72. Rule of 72, we talk about that. And tomorrow we will start a series on real estate. We've been doing this ETF, rule of 72 for the past 3 days. So today will be the last time that we'll talk about ETFs, then we'll go switch to real estate as of tomorrow. So welcome in. Make sure you click on the follow button and join the $1 Million League. This is the League of Millionaires. People that want to gain financial freedom in 10 years or less instead of waiting to 45 years, right? 45 years, age 20 to 65, people don't still get there, but then you want to get there in 10 years or less. And you will see, I'll prove it to you how. I will show you some of the tips and tricks. Let's tap out the live, share out the live, invite your friends over, and make sure you click on the subscribe button for my YouTube community. So think about it. So a multimillionaire put their money primarily in equities, and we're checking, where does the multimillionaire, where do they put their money? They put their money in equities. They put their money in real estate and private businesses, because having idle cash loses value to inflation. If anybody cares to share, what is the interest what interest are you getting on your bank account? I get 0.01%. Right? I don't know if I'm not talking about IU savings account, regular bank account. From Chase, I get 0.01%. Bank of America gives 0.01%. But put in the comment, what interest are you getting from your bank, right? So it means that we getting 0.01%. It means that I'm losing my money at 3.8% to inflation, but I am only getting what back? I am only getting 0.01%. What does this mean? It simply means that I am losing 3.79% every single year. That's what I'm losing for the fact that I'm putting my money in the bank, right? For the fact that I'm putting my money in the bank. And that's part of the value you would see in this book. That's the reason why you need to put your money not in the bank. Putting your money in the bank is not the right way to go. Get a copy. It costs you $10. As a matter of fact, I'll put it right here and I'll just pin it for anybody that wants to get a copy of that, right? This is summertime, $9.99 right there. Get a copy for yourself. I'm not being paid for that, but if you want to, we are intentional about your money. You work so hard for your money. Get a copy of the Rich Dad, Poor Dad right there. So, where does the multimillionaire put their money? They don't leave their money in the bank. They put it in real estate equities. They focus on long-term wealth compounding. Long-term. Penny stock is not there. Day trading is not there. I'm not saying day trading. The people that know it well. But they did not say day trading. So it means that day traders, like the multimillionaires, they don't put their money in day trading. They don't day trade because they focus on long-term wealth compounding. So whenever I tell you, okay, long-term investing, let's do this. Some people will say, oh, it takes a long time, right? But guess what? It's a strategy that works. At least you know that it works. Now let's tap out the live. Let's share out the live. Sharing the live means pressing the my forehead on the screen. Your contact is going to come over and then you share with them. Share the love. Share this knowledge, right? Nobody taught us this in school. We are teaching ourselves this, okay? So share it and of course tap out the live. And if you're sitting here, you have been sitting here for at least 5 minutes, right? 5 minutes. We've done this for more than 5 minutes now. You've been seated here for 5 minutes. Click on the follow button, right? It means that you have found value. Click on the follow button, turn on the notification bell, get your daily admin, share out the live, be a part of the community where we are building millions, right? That is the goal here. If that is your goal, then you are right in the right place. Click on the follow button right there. And we're talking about what does the millionaires, where do they put their money? Where do they put their money? So we understand real estate, equities, private businesses, they don't leave it in the bank due to inflation. The other thing is that they focus on long-term wealth compounding and asset diversification. What's the other thing? They focus on assets. So it means that your income doesn't build wealth. It is what you do with it. That's what builds wealth. Your saving doesn't build wealth. It's actually losing it to inflation. What builds wealth? When you put it in assets that compounds. And of course, you also put it in wealth, long-term wealth compounding and asset diversification. Emphasis on diversification. What does diversification mean? It means that you are spreading, right? You are diversifying your portfolio. You have assets in this, you have assets in that. It simply means that you do not put your eggs in one basket, such that if one falls, right, the risk is lower because you are in multiple places, right? And you would understand the reason why that is important, because you see the ETF right there. It is all about diversification. Why am I talking about ETF? Why are we talking about real estate? It is also diversification, not putting our eggs in one basket. Let's tap out the life, okay? I know that we are finding value. I know we are locked in, but let's tap out the life. Let's share out the life. Invite our friends over so that they can come and learn this. We'll talk about rule of 72 and you understand how important this is. And my community in on YouTube, make sure you click on the follow button, subscribe button right there. Click on the subscribe button. So good to have each and every one of you. Awesome. So it says that rather than packing excess funds in traditional, so they said they focus on long-term wealth compounding and asset diversification rather than packing excess funds in traditional checking and savings. So checking and saving is not even an option, right? The only money or the only accounts, and I will tell you the number of the 4 account system that you should have today that is going to help you structure your money, help you win with money, right? So because your checking account and that savings account, that your income account is just one account, and it should help you. It's just a distribution center. That's what it is. But a lot of time, that's the only account that a lot of people have, which is not supposed to be a distribution center. Basically, that's what that is. So now let's now understand, how do they put their wealth? We're talking about the multi-millionaires, because if you understand this, except you don't want to get to that status, if you want to achieve a result, look, that's why people ask for mentors, right? Oh, this person has walked this journey. If I walk the same journey, it means that this person hold my hand. It means that I'm going to achieve the same result, right? That's just the same thing. If you understand where the multi-millionaires put their money, if you put your money there, your chances of achieving the same result is very high, right? Because you cannot expect do the same thing and expect a different result, right? So it says wealthy investors allocate their fortunes across these core vehicles. Number 1, equities and investment funds. So equities and investment funds. What is this? The bulk of their wealth is usually held in taxable brokerage account, investment account, which is stock market brokerage account. The second thing is index funds. That's ETF. ETF and index fund, potato. ETF is traded like stock during the day. Index fund is still the same, to still managing funds, like basket of funds, but the only thing is that it is at the end of the day when the market is settled at the closing. That is when you know your price, your buying price, and your closing and all of that. That's just the only difference, but they track something similar, right? They track something similar. It's just choices, right? Now at index fund, dividend paying stocks, right? That's where they put their money. And institutional wealth management funds. There was no crypto here. I'm not against crypto. As a matter of fact, I started putting my money in crypto when it was 13,000, right? As a matter of, I'm not against crypto, but I did not see penny stock here. They did not say that. They did not indicate day trading here. So let me tell you my own personal story. How did I even come about this? How did I get into this? About 6 years ago, I lost 99,000. It's just by grace of God that it was not up to 100,000. 99,000 was what I lost in the stock market. And this is due to what? Penny stock, day trading, and options trading. My friend lost 50,000 in 5 days to Tesla options trading, right? So that's both of us combined, 150,000 was what we lost. And then I now went back. I was like, but they said that. I thought I was doing the right thing, investing in the stock market. Because the millionaires, the multimillionaires, they put their money in the stock market. How come I lost money when I'm supposed to gain money? Right? And then that's when I started doing this research. And that's when I found this. They put their money in dividend paying stock, not penny stock, not day trading, not options trading. They put their money in index fund and institutional wealth management funds. That's ETF right there. That's where they put their money. The other thing is that number two, that's number one. Number two is real estate. Real estate beyond primary homes. So middle class, we do two things. We put our money just in primary homes, and then we have our 401k. That's it. Then we have checking accounts. You think that you have done well. An average middle class, that's what we do, right? But then the multimillionaires do way more than that. So if you want to achieve more than that, get to that status and build financial freedom, right? Then you want to make sure that you follow this principle and not just checking accounts, 401k and your primary home. The second thing that they do, real estate, beyond primary homes, which is their personal homes, they invest in commercial properties. They invest in rental real estate and real estate investment trust. Real estate investment trust is the ETF for real estate, right? ETF for real estate. So to generate passive income and edge against market downturns. All right? And edge against market downturns. Somebody said real estate requires huge investment. Most people don't have the liquidity to have. You want to come around. You want to stick around because today we are not focusing on real estate. You want to be back tomorrow. We'll be talking about series of real estate for the next few days. And I will prove you wrong and show you the way how you can invest in real estate with little or no money in your pocket, right? As a matter of fact, this was the mindset of one of my clients when we had a one-on-one where she said, oh, you know what? I want to ask what's even primary home. She said, I want to buy a home, right? Yeah, she said, I want to buy a home. And I told her something. She said, it's going to take you 5 years to get there, right? She said, it's going to take us 5 years to get there. And I said, okay, why? And she said something. She said, because of the down payment. And I said, down payment. By the time we were done with the session, she's actually buying a property by the end of this year, just with her income, not even her own, with the spouse income. Not with her income, just with her income, not her spouse income. So, Tyler, I want you to stick around, right? To address whatever you say here, right? You said scam, right? I would stick around for another 1 month, right? And then you come back to tell me and you'll be the one to testify, right? To testify if this is a scam, because I don't collect money from anyone, right? I am a doctor of business and technology, right? So click on the follow button and join the $1 Million League. This is exactly how people fail, right? They are not building wealth because they don't want to get knowledge. People want get rich quick scheme. All right, so let's go to the next thing. Real estate is the next thing. And they said that beyond primary homes, they invest in commercial properties, rental real estate, and REITs, right? Real estate investment trust. That is the other thing, right? That is the ETF for real estate, right? To generate passive income, all right? And edge against market downturns, right? To edge against market downturns. That is a right there. So that's number two. Number three is private equity and angel investing. What does this mean? By pulling capital into private companies or startups, they seek massive long-term returns on assets not publicly traded on stock. So startup is a very dicey one because the risk is higher. The return is huge. But then for somebody like me, that I'm a moderate risk investor because I've been humbled, right? What did I just decided to stick with number one and number two. Then number four, it says alternative assets. What does this alternative asset do? They diversify using physical assets and commodities, including fine art, vintage collectibles, and precious metals. So unless you know all of these things, right? Unless you know all of these things, precious metal, fine art, then you can invest in that. That's why for me, I stick with number one and number two, real estate and equity. That's the two things that I stick with. And that's what we talk about here, right? If I stick with two, I don't need to follow all of the four. But one thing I want you to see here, cryptocurrency is not here. Penny stock that I put the money, that explains the reason why I lost money in the stock market. And can we tap out the live? Make sure you're tapping out the live. It costs you really nothing but just to tap out the live. Elfric, Vanessa, Bisola, King Gid, Ama, Adi, Adri, Prestige, Trebos. Let's tap out the live. Invite your friends. Click the four. Yeah. You said Ohms by Tyron said 30% ETF, 70%. That is somebody that understands how it's being done. Welcome everyone. And we're talking about ETF tonight again. And if you're wondering what is ETF, now we understand where the wealthy put their money. We understand where they do not put their money, which is the bank account, right? Bank account gives you 0.01%. But then where do they put their money? They put their money in ETF, index fund, real estate. They put it in finance. They put it in startups, right? But we are just staying with the first two, which is the one that is easier to understand, right? ETF or real estate. And thank you all for tapping out the like. Get your daily at me if you haven't. Click on the follow button and join the $1 Million League. This is the community of millionaires that is building financial freedom. 10 years or less is what it's going to take you. And I'm going to explain what I mean by this. What are the strategies we're using, right? So that you would understand and and if it's something for you, if it's your goal to become a millionaire and you know that you have to just be coachable, you have to learn all of these things, right? Listen and follow the steps. It's not a get rich quick scheme. It's not hypes, right? We don't do risky plays, right? That's why we don't even do penny stocks and all of those kind of things. We don't do it, right? So we've understood where the world put their money. Now let's talk about the next topic that I want to talk about. And you understand the reason when I say the middle class. The middle class, two things with the middle class. Two things with the middle class. Number one, right, is middle class pays the highest level of taxes, right? Because we have a fixed income tax, right? Your income increase to $200,000, right? What happens? Your taxes goes to 32%, right? Your income increases to is 150,000. Some people would even say, please leave me at 180,000. I don't want to cross to, because then what your take home is even lower when your taxes are higher, because you cross over a certain threshold, right? So that's number one. Number two, the middle class, right? The middle class are the ones that they put money in the regular bank account and they don't get returns on their money, right? Those two things are very common with the middle class. Now, let's talk about, I want to now make it, take it home. What is ETF? Because you have been wondering, so what is ETF that this doctor has been saying? And by the way, if you are just meeting me, I'm Dr. Lina. I'm a doctor of business and technology. And I help professionals turn their income into real wealth, right? We're building a community. This community is called $1 Million League. It's a league of millionaires, people trying to build wealth within, they're trying to get to the $1 million status in 10 years. The status that people do not even get to, working from 20 to 45 to 65 years. That's 45 years. They retire, they still don't get there, right? But then, with this principle, and I would show you, right? I would show you some steps today that you would understand the reason why people will still work 45 years, make some decent money, and still not be able to retire and not become financially free, right? So let's go into it. So the first thing that I want to talk about, what is ETF? ETF is exchange traded funds. And let anybody not, I'll make it simple for you, right? ETF simply means buying individual stocks versus a basket of stock. Individual stock versus basket of stock. What does this mean? Whenever they say you invest in stock, is you're buying one stock, right? But ETF is a fund, and in that fund, it has multiple stocks in that fund. It has multiple stocks in that fund. How many of us know about ETF? If you know about ETF, put 1. If you don't know about ETF, if you are new to ETF, you don't know, or maybe you've heard it before, you don't know what it is, and you want to know about it, put 0. You know about ETF, put 1. So I know, okay, timeless knows about ETF. If you don't know, put 0. Yes, Esther, okay, yes. Who doesn't know? Put 0 if you, and it's okay. Trust me, a lot of people don't know. That's how I lost 99,000. If only I've known that about ETF and real estate. I mean, okay, Ahmad doesn't know, 0, okay. Any other person, put it there. Put it there. And make sure you are also clicking Prestige, Timeless Finance, AR Freight, Amam, Vanessa, Bisola, King, Peter, Trailbox, Adi, Adre, Messi. Okay, 0. You put 0 if you don't know about ETF, or you don't know what ETF is, or you've just heard it before but you don't know what it is. Put 1 if you know what ETF is, so that I know how in depth I'm going to go into it. Otherwise, we might be able to touch real estate tonight as well. Put 0 if you don't know about ETF. Put 0, and let's keep tapping out the live. 0. Okay, Messi doesn't know. Okay, great. Any other person, put 0 if you don't know about it, and there's no shame. Trust me, there's no shame, because now knowledge is power. Now you will know about it, and you will even know it better than any other person, and you will be able to start learning. And make sure you have clicked the follow button if you haven't. Okay, Alfred notes. Awesome. Make sure you get your daily at me. It costs you 1 cent as well, and it's just basically the best return on reverse ROI on the TikTok side, because you put 1 cent, 1 penny, and you get 30 points, right? 30 points. That's what you get. All right. So for ETF, good for the people that already know ETF, but we always still more knowledge, right? ETF is just baskets of stocks or bouquet of stocks. Instead of you buying 1 stock, you are buying a whole fund with the same money, but inside that inside that bouquet, inside that ETF or inside that fund, you have 500, you have 1,000, you have 10, you have 50. It could be 700. It could be any number. It could be different things, right? That's just understand that. That's like baseline. That's baseline. Now, think about it. You now have that basket, but then what? So you're wondering. So how does it really matter? I can also be buying this 1, right? Instead of me buying it as a whole. First of all, it is so inconveniencing. You want to buy 500. Somebody talked about S&P 500 earlier. You want to buy 500 and you are buying individual stock of every unit of the 500. It just doesn't, your portfolio is going to be messed up, right? It's not even very efficient. It's not a good use of your time. But so that's one. The other part of it is, whenever you buy individual stocks, it's a function. It's almost like you're losing. Yeah, you're not losing. Your risk is really high, because it's a 50-50 situation, or we can put it as 33% layers, right? So think about it. One option, one outcome could be you grow your money. The second output with your investment. So let's say you bought Apple, right? Apple is the owner of iPhone. We all have iPhone, right? Or let's talk about Amazon. Everybody knows Amazon. You bought Amazon because it's a solid stock, right? Solid stock right there. You bought Amazon. Your chances, Amazon could either go up, or Amazon could remain not growing, or Amazon could go to 0. You can lose your money, basically. Now, it means that your risk is higher with individual stocks. Now, let's take the same. This is Mr. A investing in Amazon only. Let's take Mr. B. Mr. B decides to take, both of them have $1,000 each. Mr. A decides to take Amazon, invest $1,000 in Amazon. Mr. B decides to take $1,000 and put it in an ETF. The difference between them is that Mr. A only invests in one stock that is at the risk of you can lose its value, you can decide not to grow, or you can decide to actually go all the way up. Mr. B takes his own 1,000 and buys an S&P 500, top 500, and S&P 500 is one out of thousands of ETFs available. So understand that it's just the one that is most popular. Decides to buy multiple stocks, because it buys the ETF of S&P 500, right? Now, what's now the difference? The difference between the Mr. B is that Mr. B, inside, whenever he invests that $1,000 in an ETF, is buying Amazon, is buying Meta, is buying Nvidia, is buying Google, is buying Microsoft, every top 500 companies at point in time in the United States. A lot of people always miss this. Point in time. Dr. Lina, what do you mean by point in time? Point in time simply means that they are being reevaluated every single quarter. It doesn't mean that because you are there right there, you got to top 500 companies in the United States, you remain there forever. No. They are checking you every single quarter. So you have to remain your assets, your liability, your goodwill, litigation on your record, your cash flow statement. They are looking at your income statement. They are looking at everything to see that what is your return on your investment, your revenue, right? All of those things are the things, your gross profit, your net profit, all of those things that they are looking to show that, okay, you still remain the top 500 companies. Now, how does this impact you as an investor? And why does the multi-millionaire, why do we call it a millionaire machine, or why does the multi-millionaire invest in it, or why do they like it, right? It's because it means that you are investing your money in the top 500 companies. Like I said, S&P 500 is just one. You can put your money in the entire US stock market, as a matter of fact. So, and buy the entire 3,200, right? Everything. You buy everything. Now, having said that, now you're not saying, okay, so how does still that impact me? Remember, let's take Amazon for instance. Let's assume Amazon is the owner of AWS, right? AWS is the data center hosting so many clients, so many companies' data, right? Let's assume for some reason it got hacked. I mean, Canva was just hacked about 3 weeks ago, housing the data of so many schools in the United States and worldwide. Canva. So they were just hacked and they had to pay what? Ransom. And now think about Amazon hosting so many top companies' data. Someone asks Amazon, I mean, if they can ask Canva, they've asked bigger companies, they asked Equifax or whichever one in the past years. What's going to happen? What's going to happen? Because that is data privacy. People's data is going to be lost. There's going to be data breach. There's a vulnerability in the system. There's so many gaps. What's going to happen? AWS is a part of Amazon. All right? AWS is a part of Amazon. What's going to happen to the stock of Amazon? What's going to happen? Anybody can tell me what's going to happen to the stock of Amazon? We already know the stock of Amazon. Can we engage so that I'm not the only one talking, right? Can we engage, right? It will be great. Tap out the like, share out the like, click on the follow button. If you've been sitting here for 5 minutes, it goes up. Oh, wow. With a vulnerability, it goes down. Good job, Mercy. Good job right there. It goes down. Thank you so much. And please feel free to comment. It just is the engagement is, and let's tap out the live. Let's tap out the like. Click on the follow button if you have not done that. Join the $1 Million family. Congratulations to Mercy, and she just joined the $1 Million League, taking a decision on her life, and trying to become a millionaire in less than 10 years. In 10 years or less, that's the $1 Million League. So whenever you see the MDL, that is $1 Million League. That's what this community is all about. And you would see, I would show you some of the reasons, right? Why you can get that in 10 years or less. You would see. We'll get to rule of 72. So the stock is going to fall, right? That's what is going to happen. It's going to fall. What does that mean? That 1,000 that Mr. A puts in there, it means that the 1,000 is going to lose value. That's the risk in investing in one stock. Now let's take Mr. B. Mr. B, that's actually my kid's principal. Mr. B, on the other hand, he invested in S&P 500. Inside the S&P 500, there's also Amazon in S&P 500, right? Amazon is there. But so is Meta. So is Nvidia. So is Exxon. Like, that's energy, right? ExxonMobil, right? So is that. They are all in that basket of funds. So what happens if Amazon maybe loses 50% of its value, right? It means that his $1,000 would have later goes to $500. He's lost $500. But taking the same scenario, is $1,000 in an S&P 500, for instance, right? There are so many of them, ETF, S&P 500, because there is the Makese, welcome. Because there is because it's not just the only company there. There are still so many solid companies. Energy is there. All other industries are there. Like, all of FMCG, retail, automobile, so many in that industry, a different industry, right? Retail is there as well. All of them are in that basket of fun. What's going to happen? Even though if Amazon falls, what's going to happen? The other ones are still going to lift it up. So think about it. When there is during the Iran war, right? It's still going on, right? During when the stock market was really down, yes, the S&P 500 went down. But what happened? The effect will be less. Thank you so much, Messi. Thank you so much, Messi. The effect will be less because it is just Amazon is just one company. We still have 499 top companies. So why is the millionaires? Why are they putting their money? That's the reason right there. Remember, one of the words that they have in there, when I read it out earlier, was one thing. They said they focus on long-term wealth compounding and asset diversification. Hey, and you got your daily admin. Welcome to the, thank you so much for the daily admin. Make sure if you have not clicked on the follow button, join the $1 Million League. This is the League of Millionaires, right? All that we're doing, you're building your wealth in 10 years, right? So that you get financial freedom. Work because you want to work, not because you have to work to pay bills. They're two different things. Have financial peace. Make sure you click on the follow button if you haven't checked. As a matter of fact, if you have been sitting here for more than 5 minutes, click on the follow button. Make sure you also get your daily at me, right? And turn on the notification bell or turn on the notification, right? So that you know whenever I come live. And then you can come and learn the strategies. Trust me, this is about strategies. This is a whole wealth building academy, a whole wealth building curriculum. That's what this is all about. So, which was not taught in school. We were taught how to build income, right? How to get a skill, get income, right? That's what we're taught. We were not taught how to build wealth. This is how to build wealth. So tap out the live. Thank you for tapping out the live, sharing out the live, clicking on the follow button if you haven't joined the $1 Million League. So diversification, how to work for others, right? Yeah, diversification. That's what this is all about. Let your money work for you. So it means that the risk is lower when it comes to ETF. So by the way, if you have been wondering, see, the fact that you leave your money in the bank, and I will prove it to you with the rule of 72. So if you've not heard about rule of 72, you will learn it here. You've learned where the wealthy put their money. You will learn about rule of 72 because that is going to practicalize and show you when I tell you that putting your money in the savings account, right, is not growing your wealth. Right? That your income is not going to build your wealth. What is going to build your wealth is what you do with that income, right? And you would understand this. So we have the 0 point, it helps you to, how do you do that? You would get it. Don't worry, we'll get there, right? 0 point, ETF is established, diversification of portfolio. ETF is extra traded funds, right? You can buy it like stocks right there and you start investing. That is ETFs for you. Airports, welcome to the $1 Million League family. Congratulations to you with the goal of getting to that millionaire status in 10 years or less. So now let's do this. We've talked about ETF. Now you understand ETF. Now we have said that it helps with diversification. Another thing that it helps with, what is the return on investment? What is your return on that on your ETF. Let's take S&P 500 because it's pretty popular. Everybody knows about S&P 500. Top 500 companies in the United States. As a matter of fact, there are hundreds or if not thousands of ETFs out there, right? There are thousands of them out there. So ETF now, S&P 500, it has returned. Take your gadget or take another gadget and check. I always say trust but verify. You know, people come on the social media space, they call everybody scam or say whatever. So that's why trust but verify. Take your gadget, my listing, welcome in, right? Take your gadget and or use another laptop and check what has S&P 500 returned in the past. Can somebody check? One person check. What has it returned in the past 40 years, averagely? What has S&P 500 returned averagely in the past 40 years, 40 or 30 to 50 years? You can use that. Another person check. What has S&P 500 returned in the past? Thank you so much, Timeless. What has it returned in the past 10 years, averagely? In the past 10 years, that's a different data. Then what has it returned last year? What did you return last year? S&P 500 average, what did you return last year? What did you return average in the past 10 years? There's the 30 to 40 years, 30 to 50 years. Timeless said yes, 10%. That is close to being correct, but it's an average, is 8 to 12%. So you are very, very on point because you took the median or the mean, right? Makesa, thank you so much for the donut. Really appreciate that, right? Timeless said 10%. That is absolutely close to being correct because it's a range 8 to 12%. But if we take the median or the mean, right? Because if you add it up, the median, that's going to be what? 10%. So, you know, you are correct. So we'll take 10% and use it. And then somebody please check what it has returned. I know the numbers, but I want us to check it ourselves, right? So that you can verify. I am not one of those people that come to tell you fluffs here. Here is about serious business. Building wealth is serious business. And as a matter of fact, I have my own integrity and a name, right? Because I'm Dr. Lina. I'm not Dr. Alias, right? I am Doctor of Business and Technology. So there is an integrity that comes with my name right there. And my day job is Vice President of Technology. And I'm just teaching people what I know and what has worked for me. I'm a Vice President of Technology and I'm a professor teaching AI cybersecurity and deep learning, right? And of course, I have built real estate portfolio of double digits. So I'm just sharing basically as a corporate social responsibility. That's what I'm doing. So I have a name to protect. So by the way, who else wants to check the past 10 years? Past 10 years, average, what has S&P 500 returned? While we use this first data. And also, can somebody also confirm? We have a lot of people here. Make sure you click the follow button. Makesia, Timeless, Messi, Ama, Airport, Mayalistic, Prestige, Elfred, Shell, Sky, Bisola, Dr. LD, Navi, Centra, Audrey, Obem, Assam, Beatrice, Meg, King Gig, Saint, TR Brown, Trail Boss. If I did not mention your name, sorry, it's not like I missed. Macasia, thank you for all being here. Mayalistic, thank you for tapping out the live. It's not like I'm missing you. I just wanted to make sure that, yeah. So how much, what has S&P 500 returned in the past 10 years? I can, if nobody knows the answer, I can tell you. Cute Sammy, welcome and thank you for tapping out the live. What has it returned in the past 10 years? I'll tell you, but give you time because I want us to also learn. This is you doing your research. You know, I always try to, I don't give people fish, I teach you fish. No, that is NASDAQ 100. What you just have messy, you try, that is NASDAQ 100. S&P 500 is what we're checking. S&P 500 average is public data, right? Don't let anybody come and start, trying to gatekeep and all of that. What is S&P 500 for the past 10 years? And I will tell you, yay, hey, Stephanie Go, that's the person I said she was, by things on City Street. Stephanie, I always put you out there, right? Welcome in. How are you doing? It's been a minute. How are you? So, 22% is NASDAQ 100, but S&P 500, and I'll help each and every one of us, it has returned 14 to 15%, right? Take your time. Take your time, 14 to 15%. That's what it returned averaging in the past 10 years. Yeah. S&P 500. Macasia, and P. S like you and P. And P. P for polar, S for school, right? Right? P for pool, S for school. S and P. 500 in the past, averaging, yes, that's correct. S&P 500. What did it return in the average in the past 10 years? It is 14 to 15%, right? Standard and Poor, yes. in the past 10 years, it has returned averaging between 14 to 15%. And you see the reason why I need this data. Then the third question, right? Please put, at least everybody will know this, right? You don't need, this one is not public data. How much as your bank, your checking account, Bank of America, Chase or Wells Fargo, or your local country? I'll join your community because I love investment. Yes, yeah, click the $1 Million League right there. You know, click the follow button, get the turn on notification bell, and of course, get the daily at me right there. Yeah, right there. So great. Welcome. Congratulations to Shegzi. And you just decided to do that. You just did that. Congratulations. Timeless says 0.01%. Thank you. Any other person? You know, I'm not talking about IU savings account. IU savings account gives you 3 to 5%. But we're talking about the regular 0.03. Great. 0.03. So we will use 0.03. We'll use 0.01. So let's go to the next thing. Now we have data, right? We have 3 data now. 30 to 40% S&P 500. Let's start with your time what's it called? Let's start with your bank account. 0.01%, right? That's the one that we have right there. So take your calculator. Take another gadget, calculator, right? Rule of 72. What is rule of 72? Rule of 72 simply means, and this is the last day that I'm going to teach this. I've been teaching this for the past 3 days, and we're going to be moving to real estate, where we'll talk about 1% rule and all those 7 or 6 pay stops that you get with real estate. We'll be moving to that tomorrow. But rule of 72 is what is rule of 72? Rule of 72, you can check on Google. Always fact check. Trust but verify. Rule of 72 simply means that the rate at which you double your money, right? So you want to know how long it's going to take you to double your money, right? You have 100,000 or you have 10,000. How long is it going to take your money to double? That's what rule of 72 is. So maybe you've had that question, right? Oh, I got this inheritance. You know, where can I put it? I want to double this money. How long is it going to take? Yes. Listen and count down, you would understand it. I will break it down as ABC for you. Rule of 72 shows you how you double your money, how long it's going to take you to double your money, number of years, number of days, months, and all of that. So you're going to take the number 72, right? 72, and then you divide it by the rate of return, right? The rate of return, which is interest rate, return on your investment. So we have Timeless Search, he gets 0.01 from the Bank of America, from his own bank account, checking account. 0.01 is what he gets. So take that 72, do the calculation as we are doing it. You take your own calculator, use another gadget or something. 72 divided by 0.01. $72. Who wants to give me the answer? This is classes in session, guys. Class is in session. Whatever you see there, that's the number of years it will take you to double your money if you leave it in the bank. That will tell you exactly the reason why the multimillionaires do not put their money in the bank. 72 divided by 0.01, that's the interest you get in the bank. 72 divided, that's the rule of 70. I did not create it. You can go on Google and check it. 72 divided by the rate of return, which is that interest rate, 0.01. That's what you get in a whole year. It takes you 7,200 years. 7,200 years. It's not me. 72 divided. That's why I want us to do the calculate. Thank you. Thank you so much. Thank you, guys. Thank you. 7,200. Right? Make sure you click the follow button if you have not connected. 7,200. So it's just to bring it to perspective. $10,000 for a whole year, all that you get using the 0.01%, right, that you get in your bank, which is what the middle class does, it will give you $1 in a whole year. So you get $10,001. That's what you get at the end of the year. Yeah. It sounds funny. Yes, it is very, very, it's not funny. It's funny, but not funny. It is funny, but not funny. Yeah, it is funny, but not funny, because that's total ripoff. And then inflation will help you again. Yes, absolutely. Timeless. Yes, because inflation is that, what's it called? Inflation is that, what's it called? Inflation is at 3.8%. As of 3 weeks ago, it's at 3.3%, right? It's at 3 point. So it means that it takes you 7,200 years. When you add inflation to it, that means it would take you maybe 144 years, 144,000 years, right? It's not me. It's a rule of 72. And you'll be like, so now that's an eye-opener. That's why I always start with this. It's called mindset shift. So guess what? You are making a lot of money. You are leaving it in the bank. That's the reason why you are financially stressed. That's the reason why you are living paycheck to paycheck. That's not the reason. That's part of the reason. That's a contributor, because your money is not growing. You are losing money at you are losing your money at 3.9, at 3.879, because all that inflation is 3.8 in the United States, but it's you're losing it, you only get 0.01%. So it means that you are losing 3.79%. That's what you're losing. And then on top of that, it's going to, even not losing anything at all, 7,200 years is what it's going to take. And you'll be like, oh my God, how is that even possible? Dr. Lina, take your calculator. It's not me. 7,200 divided by 0.01. So why does the multimillionaire, why don't they leave their money anyway? That's it right there. Now let's do S&P 500. S&P 500, did anybody check it? What has it done average in the past 10 years? We said 14 to 15%. So let's say 15%. No, let's say 14.5%. The rule of 72. Take your calculator. 72 divided by 14.5. You would see the difference now. 72 divided by 14.5. Somebody tell me the answer. I already have the answer. 72 divided by 14.5. It has returned, S&P 500 has returned 14 to 15% in the past 10 years, averagely, emphasis on average. Last year it did 18%. So it means through COVID, it has, if you had left your money, this is 2026, if you had put your money in S&P 500 at 2016, you would have been averaging, your money would have returned at least 14.5, because I'm taking the in between, 14 to 15%. 14.5 is what it has done, right? Averagely, right? Taking the in between in the every year since that time. And did anybody get it? 72 divided by 14.5. This is a whole class, guys. This is a class. Whenever you come to here, right? Wealth building is not a joke. You have to be intentional, right? I told you, with my vice president income and a professor income combined together, I still did not have financial freedom. And until I understood this, that's when I started building financial freedom. So be ready to learn, right? Tap out the like, share out the like, click on the follow button, get your daily admin if you haven't done that. And of course, check the gift registry. That's the only, thank you so much, Mercy. Mercy is rocking in this class. Thank you so much. This is a class, guys. It's not your regular life, because this is not, this is a beyond TikTok. This is a force. This is a community. This is a community of millionaires. Cheers, congratulations. Welcome to the $1 Million League. And I always take time to appreciate my millionaires, right? The people joining that, you just clicking that follow button because you have a reason. So 49, see, it was how many years before? 7,200, right? With your bank account. Now 4.9%. So let's round it up. Let's even say something happens, 14% or whatever. It means that in 5 years, using the rule of 72, I teach people to fish. Now you can use it, this same rule, anytime. If somebody say invest in something, then you're like, okay, what is the rate of return? then you would use it to determine how long it's going to take my money to double. Now you know that, right? Now you know where the world will put their money. Now you know we spill value here. Value, right? If you found value, put one. You have found value, put one in the comment. You have found value, put one. At least you've learned two things, where the multimillionaire put their money, and now you've learned about the rule of 72. Andrew, welcome. Okay, yeah, at least one person said one. Welcome in. So that is, it means that in 5 years or less, actually less than 5 years, your money is going to timeless. Great. Your money is going to double in 5 years or less. It's actually less than 5 years. McCancer, great, great. Thank you so much for confirming that. Let's tap out the life. Tap out the life. That's the only language that algorithm understands. Share out the life. Press my forehead on the screen. Your contact is going to come. Don't be selfish. Let your friends, your enemies, everybody, your spouse, your children, let them come and learn. Invite them over. Make sure you click on the follow button. Make sure you tap out the live. Get your daily admin. Become a fan club of $1 Million League. Have that MDL in front of your name. It's a great name because it's going to help you, right? You are building, getting to the $1 million starter in less than 10 years. We don't teach money here. We teach financial freedom. Freedom to live life at your own terms. That's what I teach, right? Money is just a tool to get you there, right? Money is just a tool. So it means that in less than 5 years, you double your money. Now, if we do 18 years, right? 18%, he did 18% last year, right? 72 divided by 18, 4 years, it reduces. 72 divided by 18, that's what the S&P 500 did last year. If you do something like NASDAQ 100, of course, the risk is higher. The higher the risk, the higher the return. Let's say 20%, right? 20%, it has done 18 to 22%, right? If you take the average, 20%, 72 divided by, oh, my iPad is going to go off. 72 divided by 18, by 20, 3.6 years. 3.6 years is what, thank you so much for the repost. 3.6 years is what it's going to take you to double your money using the rule of 72. Let's say 22% divided by 22, 3.2 years versus what you got with your Bank of America, 72,000 years, 7,200 years. It means that even if you get to 100 years, you have to be reincarnated 7,200 times and your money will still not double. That's it. It's as simple as that. I put this on the charger. Let's tap out the live. Let's tap out the live. Click on the follow button. Yes, you are laughing. It is funny, but not funny. It is funny, but not funny. But seriously, you know, if I tell you this, you'll be like, oh, Dr. Lina, come on. Now you have the data. That's why I teach. I teach you to fish, not to give you fish. Because now you can use the same data for every single thing. Maybe somebody says, oh, you know what, come and invest in my business. You ask them, what's the rate of return? They tell you, oh, 5%. Then you can use the 72 divided by 5. What does it give you? Then you can tell them that, oh, you know what? I can't do this business because it's going to take me another 25 years and I do not have 25 years. So and now let's use I always like to be conservative because I've been on the extreme end before and I lost 99,000. I always like to say 99 because it did not get to 100,000, but it was just a little change less than $100. Hey, the P5, welcome in. How are you? Thank you for tapping out the live. Thank you for getting your daily admin, sharing out the live, inviting your friends over and your family. Let them come and learn this. Look at the gift galleries. Go Populars help this community as well because it gets us on the FYP. If you see the D2 league right there, the lower we get, the more we get to see. Then you start seeing hundreds of people because algorithm will automatically push people here. The same effort that it takes to teach 30 people is the same effort to teach 1,000 people. And my goal here on this social media space is to help as many people. The more people I see that learning all this, building wealth, that's it, right? That's it. And my YouTube community, make sure you are tapping out make sure you, we don't have tap, right? Like the live. Let me know where you're connecting from. And of course, click on the subscribe button if you have not done that. As a matter of fact, I'll have long form videos that will help you right there. All right. And if you have been sitting here for more than 5 minutes, guys, it means that you have found value. Click on the follow button. There's no reason to wait. Click on the follow button before you start. It happens to me when I'm locked in as well in life. I just realized that, you know what, I have not clicked on the follow button because I found it very valuable. Click on the follow button, join the $1 million league. What's my name on white? It is Money Talk with Dr. Lina. I'm the same thing across everywhere. Money Talk with Dr. Lina. As a matter of fact, I have long form videos, 10 minutes videos, almost like a course, several of it, right, in there. I'll show it after once we get to the end of the live so that you would see. But make sure you subscribe there, and on YouTube, on TikTok, IG as well. It's Money Talk with on every platform, including Snap. Money Talk with Dr. Lina, right there across board. Awesome. So, having said that, S&P 500, it has returned. We said 5 years. Let's use average 5 years. I'm going to teach you another thing. So, you've learned where the multi-millionaire put their money. You've learned the rule of 72. You've learned ETF and S&P 500. Now, let me teach you the rule of $27. Now, using the S&P 500 for the past 10 years, you can turn down your $27 to $1 million, right? Over $1 million. Yes. So stick around and understand this. Now, this $27 strategy that I talk about, which has been very helpful, and you can also check it, is if you want to know how long it's going for you to take to blow $10,000 a year, it's $27. Keep spending $27. Buy things on TT Street, your lunch, your coffee, daily. Keep spending that in a whole year, $27, a whole 365 days. That is $10,000. $10,000. And you are like, wow, yes, wow. A lot of our hours, right? A lot of our hours. 0.01% in the bank, 7,200 years. 7,200 years is what it takes for your money to double. Then the same thing, $27 a day, 365 days, that is $10,000. And you're saying that, you know what, I don't want to have money to save. Your Roth IRA or your Divine Welcoming, your Roth IRA or your ISA in the UK or your TFSA in Canada. I mean, we have a global, Majesh, congratulations. Welcome to the $1 Million League, a family of millionaires where we are building wealth in 10 years, like $1 million status, gaining financial freedom in 10 years or less. Congratulations to you. Good morning. Yeah, good morning. So for ISA, right? Yeah, that's what we're talking about. ETF real estate. That's what we want to stick around. Get your daily, turn on the notification bell so you are here constantly learning the strategy, right? It's a strategy. This is not get rich quick scheme. This is not hypes. This is solid things that we talk about, generational wealth, how you're going to get there. And I've already shown you one. One is putting your money in the bank is going to take you 7,200 years at 0.01% interest, 7,200 years to be able to double your money. That's one. You want to know you're blowing $27 every single day. $27 every single day. That's your coffee and lunch, by the way. That's $27 every single day. That is $10,000. Your Roth IRA, to max out your Roth IRA is $7,500. That's $625, $312.50 every single 2 weeks. Less than $20 is what it takes. But then you say that, you know what, I don't have money for Roth IRA. Instead of you max it out, it's a tax advantage account. As a matter of fact, that's one of the accounts that you should have. All right. So having said that, $27. So if you save $27, right, every single day, that's $10,000. If you have $10,000, remember we said, oh, thank you so much for the heart. Yeah, I am currently at work. I wish I was less busy to fully gain from. That's fine. Be back again. It's okay. Be back again. Don't even mix it. It's okay. Just be a part of the community and all of that. Get your daily admin and share out the life. Tap out the life. You are always welcome here. So you would always learn something here whenever, and turn on notification bell because the time might change. School is over now and summer has started. Time might change, so you want to turn on notification bell. This is not my normal time. Today is just pop up where I'm coming at 8 p.m. Typically it's 12 between 12 and 1 p.m. Central Time during my lunchtime. But now that the school is over, the time might change. So you want to make sure you click on the follow button, turn on notification bell, be a part of the community by getting the daily at me with 1 cent. Do go populars, and of course look at the gift registries in right there. That's the only language the algorithm understands. So, and for my YouTube community, make sure that you also click on the subscribe button, because you and turn on notification bell so you know when I'm live as well. So perfect. So $27, that's $10,000. Why is this very important, right? This $10,000, you save $27, $10,000 using the S&P 500, right? We said S&P 500 is at 14 to 15%, right? But let's even use what it has done in the past 40 years. Let's not use the 10 years. 40 years, it means 4.9%, 14.5% return. 4.5 years, 4.9, so let's say 5 years, right? Let's not become, I want to be very conservative. 5 years. It means that every 5 years, your money is going to double, right? So you put in $10,000, right? Year one, that's $27 a day, right? Year one, you did not put anything again. After that, you only decided to say that, okay, you know what? I'll follow this Dr. Lina for 1 year and let's see what happens. And you decide not to do it again. That $10,000, you invested it, right? You put it in an S&P 500 that we talked about. Your money doubles in year 5. It doubles to 20,000. And be like, oh my goodness, that is, 5 years. Okay, wait. You would understand the reason why they said compound interest is the 8th wonder of the world. Okay? Year 10, what is it going to be? Your 10,000 becomes what? It's not going to become 30,000. Your 10,000 becomes 40,000 because your 20,000 is now going to double, right? Because you did not. Yan Chi, welcome to the $1 million family. Congratulations on you joining the community of millionaires, building wealth to be there to gain financial freedom in 10 years or less. Congratulations to you right there. So take that 10,000 becomes in year 10, it becomes how much? It becomes $40,000, right? That's what it becomes. Dr. Fatima, welcome in. Yeah, it becomes 40,000. Then and you'll be like, okay, 10,000, 40,000. Queen, welcome. Congratulations, joining the $1 million family. It's not easy. Glow, congratulations. Trust me, I would, if it takes me to pause 1 million times, I will pause. Because I tell you, building wealth is not a joke. Right? It's serious business. You want to break the trajectory in your family, right? Be the first millionaire, right? It takes somebody with courage to say that, you know what? I am going to do it. I got to do it, right? Congratulations, and each and every one of you that is taking the chances and saying that, you know what? I want to build that million, right? She said 1 million. I trust her enough, and I'm going to follow, and I will follow the processes, and I will get to that $1 million status. You just have to be coachable, follow the steps. I'm not taking money from you. Follow the steps and make sure that you're always here to listen. And of course, you will get there. You have to be coachable, follow and execute, because I can say all of this. If you don't execute, then it's not me. But if you execute, I tell you, I have done it, right? So I am just telling you, I did not read it in the book. Yes, I read it in the book as a doctor of business, but then I'm a serial investor. I've been investing for close to 2 decades, real estate for over a decade, right? So, okay, back to what we're saying, but congratulations to each and every one of you that click on the follow button, joining the $1 million league. So you take the year one is 10,000, right? $27 a day. 5 years using the rule of 72 in an S&P 500 rate of return at 14 to 15%. We use 14.5, which is the middle of 14 to 15%, right? Being conservative, right there. We're using five years based on the rule of 72. 10,000 becomes 20,000 year 5. Year 10, your 10,000, you did not add any other penny to it. No more $27 a day, right? You only did it for 1 year. In year 10, your 10,000 becomes how much? Your 10,000 becomes 40,000. I'll be like, okay, then wait till year 15. Year 15, your 10,000 becomes 80,000. It's only 10,000 that you put in. Then year 20, what is it going to be? 80,000 times 2. What's it going to be? 80,000 times 2. Anybody wants to put it? 80,000. Let's see. I want to make sure that we are following. 80,000 times 2. Let's start. Continue to tap out the live. Share out the live. 80,000 times 2. Anybody wants to share that? 80,000 times 2. 160,000. Queen. 160,000. Black Road. Yes, we're going to get to the to that number, right? 160,000. How much were you putting in? You only put $27 a day, every single day. Bisola, thank you so much for, and everyone that said that message, thank you. It shows that we are all following. Let's tap out the live. Can we get it to 20,000 taps? Let's get it 20,000 taps. Make sure you get your daily admin. 160,000. What were you putting in? $27 a day for just 1 year. $160,000 right there. Now, let's not even make it more beautiful. Let's make it better. Right? Now you've understood. You now said that, okay, you know what? It has, this sounds very good. Let me not even do the $27 for 10 years. 10 years. Year 1. I mean, in year 10, you have how much? You have $100,000. And of course, it's going to be more than 100,000 because year 1 would have also doubled, right? 10,000 would have all doubled, right? But let's assume that 100,000, right, is the baseline. 99 problem, welcome in, right? 100,000 is year 1. Now, subsequently, year 5, using the rule of 72 still, S&P 500, 14 to 15%. We did not even say 18%, not 20%. We're just using the basic, 14 to 15%, right? Year 1, what? 100,000. Year 5, what is it going to be? 100,000 becomes 200,000. Year 10, it becomes how much, right? Year 10, it becomes 400,000. Year 15, your 100,000, because you are not adding any other money. All you put in is 100,000, right? Year 10 is 400,000. Year 15 is how much? It becomes 800,000. You did not put anything outside of 100,000. It was your $27 that you were diligent and you were putting it in your safe every single time, right? Right there. And then it becomes 100,000 becomes 800,000. And then your year 20, who is going to tell me? Year 20, what's it going to be? 800,000 year 15. It's increasing every year, every 5 years, right? How much is it going to be at year 20? How much is it going to be at year 20? Anybody wants to help? At year 20, how much is it going to be? $800 times 2. Let me help. 800 times 2. 800 times 2. 1.6 million. That's not 1.6%. That is 1.6 million. Thank you, Queen. 1.6 million. If only it's going to 1.6 million. And you're wondering, you think that millionaires from another planet. That's why you see teachers, you see police officers, firefighters, people with not so much of that 6-figure income, that you will see them retire millionaire. But you see our 6-figure salary. I've arrived 100,000, 150,000, 200,000. They will retire and they will have nothing in their for retirement. So that's the reason, because somebody is just putting that lunch money, knows that, you know what, I know that I'm not making so much. I'll make my lunch from home. I will not take coffee. Even if I love coffee so much, I will have my little coffee machine. I'll buy coffee pod from Costco or Sam's Club or wherever, and I would make my coffee, and I would save that $27 every single day. Instead of me eating out and doing DoorDash, doing all those subscriptions, I would just take my 20 and do it like a clockwork, like a 9 to 5. Every single paycheck, I am putting $13.50 away every 2 weeks. Every month is $27, right? If I'm being paid monthly. And guess what? That person gets to $1.6 million. That's it right there. That's one strategy. And somebody asked earlier, who was that? Somebody asked earlier, how? Somebody asked earlier, how? Mejesh. That's some of it right there. That is one. This is one out of many strategies. See, back to what we were saying. The multi-millionaires, and let me get my iPad. And if you have not clicked on the follow button, make sure you are doing that. Click on the tap out the live, click on the follow button, join the Millionaires Leagues. If this is just a little bit, at least now you understand, at least there's some things you have found value today, right? So back to the question, initial question that we started with. Where is it? Where does the multimillionaire put their money? That's the question. Thank you so much for the roses, Macasio. Where does the multimillionaire, where do they put their money? They put their money in equities, real estate, private business, because having idle cash loses value to inflation. They focus on long-term wealth compounding. See? Long-term wealth compounding. Is S&P 500? No. S&P 500, you are investing in stock market, but it is basket of stocks. You are not buying individual stocks, right? Average, that's why you see average, right? If you are, I believe you're just joining, it's an average, right? Average, whatever we talked about right now, it's an average of what is returned for the past 10 years. So it means that there are years when it returned 4%, there are years when it returned 32%, there are years when it has returned 24, 18, 12, average for the past 10 years is 14 to 15%, right? So I put it, some people would say, oh, it has returned 14 to 15%. No, I'm not one of those people. I tell you, it's an average, emphasis on average. So it means that if you start investing, you put your money for 2016, this is 2026, you'd have gotten average of 14 to 15% in the past 10 years. Averagely every single year, not for the 10 years, every single year, your return is going to be 14 to 15%, which is way better than your bank that you are getting 0.01%. 0.1%. 0.01% is better than CD that is at 3.3% or 3.5%. It's better than fixed deposit. I mean, now we're talking about United States. I'm not talking about outside of United States. I'm not talking about like countries like Africa. I'm a Nigerian American. So like in Nigeria, you will see some that are like 18% fixed rate and all of that, but we don't have that in the United States and, in Canada, in the UK, so you have S&P 500, right? So, but then instead of you doing individual stocks, this is diversification right there. That's what the multimillionaires and the billionaires, where they put their money right there. And you can just do the research yourself. I always say trust but verify. Trust but verify. Always make sure that you go with data. Said 10 years, right? 10 years, average 10 years is what you have right there. Go on Google and check it yourself. Back check whatever thing you find on social media, right? Do not trust blindly. So how do you buy ETF, right? Or I'd already talked about what is ETF earlier, like it's a basket of stocks, right? Average. How do you buy ETF? You need to open the account. If you want to learn everything, because I know that's the next question, how do you want to buy? You see the link right here. You will find the course right there that it's going to help you to know. S&P 500 is just one. There's so many of the ETF, right? You can buy the entire US stock market. You can buy the entire international market. You can buy anywhere in the world. Just open your account and start buying. You can buy it anywhere in the world. Emphasis on that. You're in Africa. I have people in Gambia, Zimbabwe, Zambia, right? As a matter of fact, let me know the country, the state, country where you're connecting from. Put in the comment. Let me know, right? Because it's just so beautiful to just see. I've had people come from Afghanistan, from Iran, from India, right? Let me know where you're connecting from tonight. Let me know. It's people from Nigeria, from Zambia. I have people from Gambia, my South Africans and all of that. From where again? There was another one from the Caribbean, right? South America, from Mexico. So let me know where you're connecting from today. Put in the comment. And by the way, I am in Texas, in United States. Which ETF to invest in Fidelity? So that's where, see the link right here. Click on it. You would see the Smart Investing Workshop that will tell you exactly. S&P 500 is one. Like I said, there's so many. I teach people to fish. So if you want to understand, you have everything that you need to go about it, how to open the account, what to buy, because if I tell you, oh, buy this, I don't know how old you are. I don't know your risk tolerance. All of those things and many other factors are the things that are going to help you to determine which one should you buy, which one should you put your money in. Because I teach people to fish, not to. Remember the way I just talked about the rule of 72. Now you understand it better. Macazia, Messi, Shesky, Ama, Queen El Centra, Prestige, Elfred, Black Rose, Nina, Bisola, Mojisola, Chef, Yemi, Lady B, Estin, Etom, I am Bell, Akim, Favored, King J, Line JJ. Welcome, congratulations to everyone. Oh, Lady B, congratulations. You also just joined the family of the millionaires. And congratulations to you. Yeah. So make sure that you have clicked on the follow button. You want to learn how to buy ETF, click on that link and you will find it right there. The smart investing, and I'll show you how to get there. You can, everything that you need to know, how to buy it, how to start doubling your money. Remember, the goal is financial freedom. If you want to be financially free, if all that you do is you put your money in the bank, 0.01%, it takes you 7,200 years before you get there. Evergreen, congratulations. Welcome to the $1 million family. Congratulations. Make sure you turn on the notification bell. My favorite, that's great. Yes, that's great. But it's a function of your age as well, the risk, and so many other factors. So if you want to, and I'll show you how to look at the link right there. Right? Look at that link right there, nestu.me, and I'll show you how to get here in case you let me see, on TikTok, and I'll show the YouTube version as well. And by the way, if you have not followed, make sure you click on the follow button, join. Make sure you also ensure that you also join on all of the follow Money Talk with Dr. Lina on all of the platform, especially YouTube, because I have a different kind of content there that will help you. They are long form content right there for you. So look at it right here. This is my bio. That's where you would see it. Click on here. It will take you here. Click on open. And you want to stick around because we'll talk about the 4-account system, right? And you'll find it here is the Smart Investing Workshop. Right now, everything is as a discount. Make sure if you want to know how to, now you know that it makes sense. Shanti Eyes, welcome in. You want to know how to double your money. You've already known that. How, right? How to execute it, how to buy ETF, what ETF you buy, the tools that would help you. It takes you 5 minutes, right? But the course is a course right there. That course is going to take you maybe an hour or two. It's a self-paced course that's going to help you. Which account should you open? You are in Africa. Which account should you open? You are in Europe. Which account? It will tell you which which one should you buy. Depending on your age, it will give you ideas, the tools that will help you. You find everything right there. It's a very, very solid course that you can follow, pause, then execute. Automation around it such that you are not worried. You do it one time and you let it go. That $27 that we are talking about, instead of you having to do it every single day, right? It's going to do it automatically for you. So take your time and get that course, right? It costs you launch money. It's almost like free right now. So take it. The prices are going to be changing very soon. So I'll recommend, make sure you take that and start thinking about how to double your money, how to get your financial freedom in 5 years or less. So this was S&P 500. We use 5 years. You can use NASDAQ 100 and get there in 3 years. But why should you take NASDAQ? Why would I still say NASDAQ 100? Why would I say S&P 500 and not NASDAQ 100? Why? There's some reason, because it's a function of age. It's a function of so many other things. You as an individual, it's different from one person or the other. But then that course is going to tell you such that you will know what to buy. You will, because I can tell you, oh, buy this right now or buy that right now. But guess what? If I tell you, what if something changes tomorrow? What if the market swings tomorrow? Technology is no longer what it is. What's going to happen? You will just still keep following technology, but then that's not where it is. But when you understand the spirit behind the law, always understand the spirit behind the law, right? You will always win, right? Because when people tell you, oh, buy this stock because of the signal, when the candle decides to go down, what's going to happen? Because you are not following the candle, you don't understand it. And that's why some people lose money. So the smart investing workshop right there, that is the course. It's a self-paced course that you can actually take your time, pause it, start it, do this step, pause, then you go again. And that's it. That's how it tells you everything how to buy ETF. It's everything how to buy ETFs right there. So let's talk about the 4-account system as we round up. Congratulations to the person that made the purchase. Congratulations to you, just invested in yourself. You are getting it as a discount right now. I tell you, the prices are going to change to the regular prices. Right now, I'm doing CSR, helping as many people as possible, right? That's what I'm doing, right? So that you will not have an excuse. And as a matter of fact, you're saying that, you know what, but I don't have money to invest. Trust me, gone are the days that you can use that as an excuse. Now is not an excuse, because with $1 you can start investing. $1, because you can buy fractional shares. You don't need to buy the whole shares. Before, you can only buy whole share, but now you can buy fractional unit, $1 amount of it, and then you start investing. Those are the kind of things you will learn in the course. Those are the things you would learn in the course. Congratulations to everyone that's made the purchase. A few people, their purchase just came through. Ensure that it costs you launch money. Makesta, thank you so much for the roses. And let's tap out the live. Let's share out the live. Tap out the live. Invite your friends. We are going to the next topic. Remember, for those that have been here, remember we talked about I said I was going to talk about rule of 72. I was going to talk about ETF, right? And then I will talk about the 4-account system. Then I said, understand where the wealthy put their money. Then the last thing is 4-account system. Who wants to know the 4-account system that you should have? And let's tap out the live. Let's share the live. Let's get it to 20,000. If you want us to, otherwise we can move this to tomorrow or another day. But I want to start real estate tomorrow. So make sure you're tapping out the live. Put 1 if you want to know where. Welcome. I am Belle. Congratulations to you, right? Thank you so much for the daily at me. Make sure, and if you have stayed here for more than 5 minutes, it tells you something. It means that your mind finds this information valuable. You are gravitated towards building wealth. So click on the follow button, right? Click on the follow button and also get your daily at me. Tap out the live, share it with your friends. Click on the follow button. If you have been here seated for 5 minutes, join the community of millionaires. I tell you, you have a lot more informative things to gain. We talk about rule of 72. Now you never knew about rule of 72 before. Now you know what that is. How long it takes your money to double. You now know the what's the other thing? Where the wealthy put their money. That, okay, all those shenanigans that people have been telling you, you know that it's not true, right? Now you know data with data. You've learned about ETF. You learned about S&P 500. Now we're talking about the 4-account system that would help you win with money. Now you know how to start, for those that have made the purchase of the smart investing course, how to start investing smartly like a multi-millionaire, right? That course, for those that have made the purchase, you also just invested in yourself. If you have not clicked on the follow button and you never purchased, there's no way you would have. I mean, you find it out later. But one thing that is very important when it comes to, I forgot that is very, very important is time in the market. Remember the 100,000 to 1.6 million, right? The only thing that keeps them apart, that 100 to 1.6 million, does anybody know the answer? The thing that kept that 100,000 to get into 1.6 million, what was it? What was that thing? From 100,000 to 1.6 million, what was that thing that kept that gap? And we might just wrap up here today. It's almost 10 p.m. with time. Mercy, thank you so much for that. Time is that thing, right? The time in the market. So every single day that you're saying that, you know what, I will buy the smart investing course, that you say, okay, I'll buy it tomorrow. I'll buy it tomorrow. You are delaying it. You are delaying your investing. You are delaying your compound interest. Remember, compound interest works with time. There's something that they will say, time in the market over time in the market. So for every single time that you are waiting and saying that, I will do it tomorrow, procrastination is one of the biggest things that keeps people from investing. I will do it next year. I will do it next month. I will do it. I will. And as a matter of fact, for those that made the purchase today, first of all, let me congratulate. And those that have, that clicked on the follow button, join the $1 Million League. Let me congratulate every one of you. Yeah, it means that you are taking action towards your wealth building journey. You are taking actions about your wealth, right? That's what you're basically doing. So congratulations to each and every one of you. But then you have heard this. You have paid for the course. Please execute. It is not just about buying. Buying is one step. Executing is another step. And for those that are like me, I procrastinate exactly, right? You don't stop it. Procrastination is the killer of wealth. Is the killer of destiny, right? So take it. You have paid for the cost right now. And if you have not paid, take the time. If you have gone to the store, it means that you found this information valuable. It's $27. Like, it's the cheapest. And as a matter of fact, don't be surprised when you see the price change back to the regular price of $197. Do not let, and for every of the costs that you see right now, they are all at a discount. It's just to allow people to say that, okay, you have the opportunity. Everything will go back to what the value is. What the regular value is going to go back to, my one-on-one is going to go back to what you pay a doctor. 1 hour of my time as a vice president of technology is not $100, it's not $200. Even as a professor, right? So it tells you, I will now charge people by the value of my time. But right now, I am doing CSR, which is corporate social responsibility. I'm not going to water it down the same way I do free training. As a matter of fact, there's the Wealth Building Academy that's going to happen June the 6th. So if you have not registered for it right now, it's free. We're going to have 4 doctors that are coming. 4 doctors have confirmed, as well as myself. Director of admissions and scholarships, right? To teach us how to go to college for free is coming. She'll be there. Doctor of business and technology, director of cybersecurity, a professor teaching AI cybersecurity. So if you want to pivot to AI, that's going to be there, right? That's another person. Doctor of clinical therapy, social worker, has our own private practice, right? In New York, Dr. O, she has confirmed that she's also going to be here. So if your goal is to do counseling, clinical therapy, and all of that, I will be there. I have 2 more doctors that I am also still talking to. Dr. Fofo is HR director and one of the top, head of, she's actually a chief people officer right now. Chief. So that explains to you. Chief. To talk to her, you will pay $5,000 on a one-on-one. I'm still waiting for her to confirm. Hopefully, prayerfully, she'll be able to join. You are getting all this for free. I'm trying to get either a medical doctor, a nurse practitioner to also come. But I want somebody that is pivoting from one, like Dr. Aminu, is a social worker, studied criminology, and relocated to the United States and became a nurse. Is a doctor of, is a nurse practitioner, DNP. So he teaches nurses clinicals, right? So if you want to go into nursing, so either that or somebody in the medical field. But I'm trying to see people that pivot from one to another. Like somebody like me, I'm a chartered accountant. My bachelor's is in economics, but I'm also a chartered accountant. And I moved from corporate finance to technology, right? And rose to the position of a vice president of technology. When I pivoted, I did not get another college degree. but I increased my income by 30,000 under 5 months. Moved from top one of the Fortune 500, actually Procter and Gamble, and I moved to tech to oil and gas, right? To technology, right there. All rose up to the position of vice president before I even did my master's and did my master's in information systems, right? I'm saying all of this just to motivate somebody. You do not have to go back to college, right? To actually increase your income. It starts with your income. You don't have to go back to college. Certification. There are free trainings on Google Coursera. There are free trainings on Harvard Business School that you can actually take that is going to start increasing your income. We're going to talk about 5K side hustles that you can do. Things like rental arbitrage that requires little to no capital. Side hustles that you can do in case you don't want to go the route of increasing your skill, you don't want to take certification, but you want to supplement your income. We're collating that as well. And you're going to get all this that I'm talking about, guess what? For free. For free. It's June the 6th, and it's called the Wealth Building Academy. You will find it right there as well. Follow this link, https://nestu.me MoneytalkwithdrLina, or you would find it right there in my bio. And it's the Wealth Building Academy. It takes you a few minutes to register. A lot of people has registered. We have 100 seats. And once that 100 seats is full, and I know that we have gotten past that we've not even put, it's this coming week that we'll start putting it as part of content. And because it's involving so many other doctors and so many other people's community, like Dr. Fofo even has a larger community, right? So everybody would want to be a part of that, right? So I'm still talking about it in my life. Take the opportunity now that we've gone past the half mark right now at this point, and we have not even put the flyers or put any content around it except talking about it on live here on IG and on YouTube. That's it. And it's already gone half past. So take the advantage right now. That's it right there. That's the link right there. https://nestu.me/MoneyTalkWithDrLina, or you will find it in my bio, like I showed it earlier. So congratulations to the people that already made the purchases or secure their seat on the Wealth Building Academy. I think we might so this is it. You find it, the Wealth Building Academy. That's it right there with my beautiful face. You find the link in my bio, click on it and follow the step. It takes you 2 minutes. It's just going to ask you your name and your phone number or something, and you are registered, you know that you have your seat. But please, if you know you will not be there, please don't take the seat. We have very limited seats. The last training that we had over 100 people registered, right? So if you're not going to be there, don't take it away from another person. Another person wants to increase their income. Reason why income is important is when you have your income and your expenses low, this is what you use to invest in ETF. This difference between your expense and your income, right? That's what you use to reinvest in real estate, right? But if you don't have anything to invest, then it's zero. 0 times 0 is 0. 0 times 1 million is 0. So it starts with that income, and that's why we need to address that income part. We would also talk about discipline. We talk about financial literacy, financial discipline, financial planning, right? Things like LLC, we talk about that, trust, probate, all of those kind of things. Things that when you now build the money, how do we protect it? We're going to touch it. We're going to touch a little bit on smart investing as well. We touch a little bit on real estate, but not in depth. But if you want in depth, right, it's going to be breadth. We're going to be doing 2 things. Breadth of, there's something called depth skill and there's breadth skill. Breadth of smart investing, breadth of real estate. You want depth of it, there is the cost that you would find right there. Just the same thing as a course that's going to help you right there to learn how to buy real estate in 90 days, how to buy it, how to invest, do ETF, the step-by-step for ETF, you find it right there. Each of the course has everything that you need right there. But in the Wealth Building Academy, it's going to be more of the depth of your income, how to increase your income, supplement your income, get the skill, whatever, right? You will have that. The other thing that you'll have is we're going to focus on the financial fortress, right? Right there. And by the way, next month, we are also going to have the mid-year money challenge. So June is very packed because we're starting another half of the year. Where are you at on your new year, new me? I guess there's so many of those goals that you have not accomplished. So we're going to do a money reset challenge. We did it in December, right? So be on the lookout. So if you have not clicked on the follow button and also turn on notification bell, get your daily at me, be a part of this community. There's so many. By the time you're done, my goal this year was I'm doing this for a whole year. By the time you're done, right, it is going to only be on you to say that you have not built wealth or you are not on your way to the $1 million status, because we're going to give you all of the tools, equip you, but it's all on you. The only thing is we will not come and help you execute. We cannot help you execute. If you are struggling with execution, you can now do something like mentorship, 90 days, but we only hold your hand for 90 days. That's it, right? But then it can help you drive the discipline and end the procrastination cycle right there. So let's wrap it up tonight at this time. We spent 2 hours teaching. I don't want everything to go past our head, right? I hope you have found value. Put 1 if you have found value tonight. And can we tap out the live to 20,000? Can we tap out the live? Check if you have been here and you have not gotten your daily at me. I mean, you've not tap out click on the follow button. Click on that follow button. Bisola said 1. Awesome. Messi said 1. Click on the follow button. I know a lot of time we are all locked in, especially when we talk about serious thing about money. People are so locked in that, they get to miss out on, oh, you know what? I did not know I've not clicked on the follow button. Click on the follow button and of course, tap out the live. I am so glad that each and every one of us, we have taken the actions today, locked in, right? Locked in, for minutes. Bisola has been here from Messi, quite a number have been here. They've been here for the past 2 hours. Can you imagine? They are going to work tomorrow and they're still here, right? Some people are in Canada, all over, right? And some people, this is morning for them, right? And they are all locked in. You guys are super amazing. I'm so proud of each and every one of us. So proud of us. Yes. Me said hat. I love you too. Thank you so much for that. Make sure you still have 2 minutes. 2 minutes to get your smart investing. You've known how to double the money, but then for you to execution is the biggest deal for a lot of people. Lack of execution, right? You want to execute. That cost is there for you. Smart investing cost, right? It costs you launch money. And take it right now before the price goes up to the regular price, which is $197. Right now, it's at $27. Free money free for you. This is free for you. $27. It goes back to $197. So take the advantage now. It is still at the CSR. This is CSR price. It will go back to the regular value shortly. So before it goes back, take the advantage of the CSR, Corporate Social Responsibility discount right now. How do I get the cost? Okay, let me show you. You'll find it right here. But that's a link, but let me show you. And you can do that while we are live right now. See it. And you can step out so that I am here. Doctor, what do you do? No, wait. Hold on 1 second. See, right here. Click here. nestyou.me/moneytalkwithdrLina. Then you click on it. And that is it right here. The Smart Investing Workshop. That's the cost right there. Click on it. I am still here for another minute or two. Can you send me the link? Send me a DM, Yemi, and I'll send you the link. Send me a DM and I'll send you the link right there. But the link is also here, right here. That's it right here. But if you send me a DM, we'll send you, myself or somebody within my team will send it to you right here. But that's it right there. Click on it and you'll be able to make the purchase right there. Awesome. Yeah, so I'll give it 1 more minute. Anybody that wants to make the purchase. Doctor, what do you know about online digital marketing? Not so much. I'm not a marketer. So online digital marketing, is this something you want to teach? I am Maybell. I'm not a marketer. I am just a teacher, right? So, but digital marketing, people say about it, you know people talk about it, online digital marketing. As a matter of fact, I should also get a little bit of information, because if you are talking, it's also going to be part of the 5,000 5K also, right? That we are the list that we are developing, so that you can, if you want to supplement your income. And let's tap out the live, click on the follow button if you haven't. Tap out the live, right? So it's something that I should actually look into, so that I can share with you people, not because I use it, but is it not digital marketing? That is all of the things like ebook and all of those kind of things, right? Yeah. So Yemi, send me a DM. We'll send you the link. Okay, send me a DM, but you can actually just step out right now and follow the link right there. But if you send me a DM, I would send you that link as well. Or somebody within my team. Or it's right here. You can use this. You can step out, go into the bio, and you'll see it, follow the steps. Or you can also get or send me a DM, and we'll send you the link, the direct link to it. And you can register. I mean, you can get the course right there. And for those that have made the purchase today, congratulations to each and every one of you investing in yourself, right? But make sure you execute. Make sure you check. You should have received an email in your box, right? You should have received an email. If you do not get the email, please send me a DM. If you have, or send a DM, we would respond to you. Okay? Send a DM, would respond to you and to help you. But typically, it should be pretty easy. Nestu does a good job at that. It should be pretty easy, and it should be pretty easy. You should get a link, and then you will have access to the course. But please, make sure you check it out tonight and start it. The weekend is around the corner. Now is the perfect time. Over the weekend, just start it up, right? Start it up and follow the process right there. Awesome, awesome. We'll be wrapping up here in 2 minutes. Any other person has any question about the course, or do you have any question at all about ETF, we'll wrap up in 2 minutes. You have any questions about Rule of 72 ETF? We'll talk about the account system tomorrow. The 4 account system. We'll start the series on real estate tomorrow. We will start that series on real estate. Remember, we're talking about ETF. Now we talk about ETF. We will talk about the 6 options, 6 ways that real estate pays you. I call it the wealth engine. And trust me, I can talk about real estate from morning to now. Do you know the reason why? That's because I own and manage double-digit real estate portfolio, and it's succeeded. It's really built me some decent wealth, right there. And you're wondering, but it's a lot of down payment. We'll talk about strategies you can use with little or no money, right? Little or no money, where you can actually buy real estate, right? A lot of time people think it takes a lot to buy real estate. It just takes 3 things. We'll talk about it. You want to click on the follow button and be here tomorrow. Don't forget to connect with me on every of the platform. For those that joined the $1 Million League today, congratulations to you. Follow across all platforms. It's Money Talk with Dr. Lina. Doctor is Dr. Lina is Lina, right? Follow, subscribe to the YouTube channel as well. And there's so many free long form videos, 10 minutes, 5 minutes video that is there for you, right? That's going to really, really help you. As a matter of fact, this Sunday, there will be the latest video as well that's going to come, that's going to really help you, right? And change your financial story. All right, 1 more minute for anyone that wants to make the purchase. I'm here just so in case you have any question with your purchase or whatever, you're having issues, let me know. Sister Vera, how are you? It's been a minute. Awesome. And click on the follow button if you haven't. And for those people that got their daily admin, make sure that you claim your point. Make sure you claim your point. Bisola, everyone that have see, I am Mabel, Yemi, Central, Alfred, Bisola, IFK user, TY Farmer, Guapad, Kuku, Ying, Pumping, EMS. So good to have each and every one of you right here today. We'll be wrapping up the live right now and be back tomorrow. I'm here between 12 and 1 Central Time. So you want to click the follow button in case the time changes. Turn on the notification bell as well, just so you will know when I'm live. Okay, you know when I'm live. All right, I hope we all found value today. And we'll wrap up the live now here. We did 2 hours. Super amazing to have each and every one of you. Ensure that your money is working other than you do. I love you so much. I love you. And make sure your money is working other than you do. All right. Have a good night rest and stay blessed. Bye. And my YouTube community. Bye.